As a small business owner, you likely spend money on many things to keep your operations running smoothly. Wouldn't it be wonderful if every single one of those expenses could automatically lower your tax bill? Well, the direct answer is no. Not every single expense your small business incurs can be deducted. The Internal Revenue Service, or IRS, has specific rules that determine what qualifies as a legitimate business deduction. The core mechanism behind business deductions is what the Internal Revenue Service calls the ordinary and necessary rule. An expense must be both ordinary and necessary to be deductible. Ordinary means the expense is common and accepted in your particular industry or business. Necessary means the expense is helpful and appropriate for your trade or business. It does not mean indispensable or required. For instance, office rent for a dedicated business space is both ordinary and necessary. However, a brand new personal luxury yacht, even if you sometimes discuss business on it, would generally not meet these criteria because its primary purpose is not directly tied to your business operations. To ensure your expenses meet these guidelines, it is crucial to clearly connect each cost to your business's income-generating activities. For example, if you incur travel costs, you must demonstrate a clear business purpose for that travel, like attending an industry conference or meeting with a client. Meticulous record keeping is your best friend here, meaning you should keep receipts, invoices, and detailed notes on the business reason for every expense. Also, consider setting up separate bank accounts and credit cards solely for business transactions to avoid commingling funds. A key insight from tax professionals is understanding the difference between a capital expense and an ordinary expense. While ordinary expenses are deducted fully in the year they are incurred, a capital expense, like purchasing significant equipment or real estate, is capitalized and then depreciated over several years. This distinction impacts when and how you realize the tax benefit, so knowing which category your expense falls into is very important. By diligently understanding and applying these principles, you can confidently identify and claim legitimate business deductions. This careful management of your expenses translates directly into a lower taxable income for your business, ultimately helping you keep more of your hard-earned money and fostering greater financial stability and growth.